The stage is yours.
Good morning, David, and good morning, everyone. It is a pleasure to be here today. My name is Santillan, and I'm the head of sales for Fireblocks in Switzerland and also in the south of Europe. And we have here today David Newns, that is the head of SDX, that is the SIX Digital Exchange. And we're going to be talking today about how SIX and SDX join the world of digital assets and are launching their business. And I guess the first questions that is interesting for the audience is to discuss what is SDX? What is your vision for the company that you're building?
Well, thank you very much indeed, Anna, and a pleasure to be here. So what is SDX? So SDX is part of SIX Group, which is the infrastructure provider for Switzerland. So in 2018, SIX, which is owned by a large number, about 140 banks in Switzerland, made the kind of rather ambitious step of deciding that DLT was and blockchain were technologies that could basically underpin and revolutionize the capital markets. And if they were to look at what the world might look like in 10 years' time, could they conceive of a stock market and that was ultimately based on this technology? So they embarked upon that project in 2018, and in 2021, SDX got its license to operate a fully regulated financial markets infrastructure, an exchange, and a central securities depository built upon blockchain technology, which in our case was the R3 Corda permissioned ledger.
One question that I think is interesting for many on the audience, we have seen many exchanges. How does having an FMI license make SDH different?
So I think it's a real exchange, as in it actually has a license to operate an exchange, and that an exchange from the perspective of what it means from the traditional sort of context, which is all the governance structures, the controls, the transparency, the reporting, and so on, capital adequacy, that all the entire framework that as a consumer of that particular service you expect with a regulated piece of market infrastructure. So it differs from a crypto exchange in that most crypto exchanges don't actually have exchange licenses. They have licenses associated with means of payment and so on. Mm-hmm. It also differs from a crypto exchange in that we do not trade cryptocurrencies. We list and trade digital securities. And those securities, because we are Swiss-based and the regulation in Switzerland is pretty clear around this, are legally identical to securities in the traditional sense.
Talking aside from just traditional securities, that is a very important component, but I know you have plans, and we've been discussing a little bit about Web3 and your plans for enabling companies that are venturing into the metaverse from an institutional perspective. It would be great if you can tell us a little bit about your plans in the space.
Our plans in the metaverse. So yes, the SDX FMI initiative, or that sort of pillar of our strategy, is only one of three pillars, and the second one is essentially what do we, as a financial markets infrastructure provider in Switzerland, where do we think that the market expects us to participate and provide services in the sort of digital markets infrastructure of the future? So yes, providing DLT-based solutions on the FMI side is one very obvious sort of area that we should be participating in and providing services. But the other area is from the perspective of public chains and the sort of underpinnings of Web3. What foundational services should we be offering in that particular space? So last week we announced the launch of SDX Web3 services, which the first iterations of that are going to be custody as a service. And non-custodial staking. So we feel that helping secure public chains and providing validator nodes, providing staking nodes for the marketplace is an appropriate place for an infrastructure provider like SIX to be participating, given its long history of providing infrastructure in capital markets.
Excellent. Talking about the foundation technology that is important for institutions coming into the space, another main pillar is digital money. That will be, I guess, central bank issued digital currency at some point, but in the meantime, we will be dealing, and we are dealing already, with publicly issued stable coins. And I believe you do have an interesting, quite a unique stablecoin project as well.
So we have, well, on the digital security side of things, to enable the instantaneous settlement of the securities transactions, because one of the unique selling points of SDX as a digital securities exchange is that, and it differentiates it from a traditional exchange, is that we achieve atomic settlement through the ledger technology that we employ. But that requires that we have stablecoin issued on ledger. So we don't call it a stablecoin. It's not a stablecoin as people traditionally perceive things like USDC or Tether to be. It's considered by the IMF to be a virtual or a synthetic CBDC. So we issue tokenized Swiss and shortly tokenized euros to our members when they deposit Swiss francs or euros with us. And we then hold that reserve one-to-one at the central bank, the SMB. So we've conducted a number of experiments with the SMB and the BIS Innovation Hub around CBDCs and leveraging the SDX technology in that particular use case to cover a number of sort of settlement scenarios around digital security, settlement and payments, and also in conjunction with the Banque de France, some cross-border CBDC experiments. But what the experiments all together illustrated was that with the participation of the banks that were involved, we've shown that legally and operationally and from a technology perspective, we can actually cover all these various scenarios, often integrated to the core banking systems of the banks who are involved in the projects, that we can actually achieve this sort of CBDC-driven, DLT-supported digital security settlement context. So we are now one step away from actually issuing a CBDC in Switzerland. It's simply a policy decision by the SNB to make at this point in time. But I think that we have I think, quite an interesting sort of vision at SDX of where the whole SDX and stablecoins and CBDCs all fit together. So I don't consider retail CBDCs to be particularly interesting. I think there's a lot of issues around a retail CBDC, both from the perspective of the sort of surveillance aspects of things that individuals get concerned around, as well as sort of more broader impact on things like fractional banking and the way that that money generation actually occurs within society today and monetary policy is executed. But I do think that I think there's a part that stablecoins can play in that sort of innovative retail sector. But underpinning those is this whole requirement around transparency of reserves and the ability for the stablecoin issuer to easily be able to liquidate those reserves. And it feels very natural that if you can achieve atomic instantaneous settlement of your securities executions, then what you have there is and you can settle that in a riskless fashion with a CBDC, you could build a foundation for the whole of the DeFi marketplace that starts with CBDCs, enabling stablecoin issuers to easily liquidate their assets and achieve and therefore provide the sort of operational robustness and agility when it comes to enabling the liquidation of the stablecoin to users who are using that stablecoin in the first place when they want to get back into fiat. And that then means that underpinning the whole of the DeFi infrastructure, you have stablecoins which are stable, transparent, and sort of fit for purpose, which at the moment we've seen that certainly there's question marks around some stablecoins, and clearly there are others that have illustrated in a sort of $45 billion value destruction that they were not fit for purpose.
It is very interesting to hear a large, regulated, well-capitalized financial institution looking to provide this solidity and good foundation into the DeFi ecosystem. I think in the last couple of days we've had a lot of conversations about regulation coming into DeFi and potentially killing the innovation. But this is a completely different approach. It's about providing robustness and solidity for the business to be able to keep innovating.
Yeah, I think that the way that DeFi can ultimately thrive and things like and get adopted, for instance, by institutions, is to address these areas of that are currently sort of fragile, and all the issues that we've seen within over the last few weeks in terms of the crypto meltdown have all been ones that look sort of disturbingly familiar around sort of over-leverage counterparty the obscurity of or obfuscation of counterparty risk. People not conducting enough due diligence, there not being enough transparency. That's exactly the same issues that we encountered in 2008 and 2001, and they're not DeFi issues. They're actually CeFi issues. But that really illustrated the fact that within DeFi, there is these very significant sort of touchdown points where it touches the world of CeFi, and for the foreseeable future, that will continue to be the case, stablecoins being one of the most obvious sort of aspects of that.
We mentioned an important point, that is the current market volatility, the market meltdown that you mentioned. Are you seeing a change of pace in the institutional projects, institutional adoption, a slowdown? What is your take so far? It's been just a few weeks, months. But
it's only been a few weeks. I think the least interesting thing about Web3 and around DeFi and about and blockchain is the valuation of cryptocurrencies. I think that's a massive distraction for the most part, and also I think that it kind of feeds a narrative around sort of Ponzi schemes and sort of at scale, which I think is deeply unhelpful when it comes to the long-term adoption of the technology. I think that there are institutions who recognize that is also the case, and therefore what's happening right now is a cyclical, healthy evolution of an innovative technology space, and just part of the adoption curve. So if you're thoughtful about things, then you'll see this as being expected on the one hand and desirable on the other. Undesirable in terms of the $1.5 billion worth or $1 trillion worth of wealth destruction that we've seen. But I'd also point out that there's been orders of magnitude more wealth destruction in the traditional financial space in the capital markets than there has been in crypto. But no, I don't think that there's going to be a huge slowdown of initiatives in this particular area, because it really wasn't about the valuation that organizations, institutions are getting involved. For the most part, there are certainly going to be some which jumped on the bandwagon because they're like, well, because of a FOMO approach to the whole thing. But organizations such as Six have always been in it for the long run, with the expectation of the promise that this is the capital markets infrastructure of the future.
In terms of the most interesting areas where you're engaging at the moment with financial institutions, where are the areas that you would like to see financial institutions in the audience reaching out and connecting with SDX on?
Well, I think that on the one hand we have the live FMI, we've done issuances, we've done trading and settlement. So we're not a proof of concept. We're actually a live venue. So we're about to conduct a couple more significant issuances and new products that I can talk a little bit about, in terms of the FQX short-term debt issuance, which we expect to have the first one being issued next month, which is a product that doesn't exist on the traditional exchange today. So looking for issuers who want to issue securities on the platform, and looking for new members who are looking to participate on the platform, take advantage of the atomic settlement functionality that we have, and the new and also enable their investors to access the new products and services that we're listing on the platform. That's on the FMI side, and then on the Web3 services side, it's if anything has been taught us for the last 3 weeks, is the whole you want to be very careful about who your service providers are in this particular space. So having a custody provider such as SDX or a crypto staking provider like SDX is going to be critical in terms of ensuring that you conduct appropriate due diligence and your expectations around institutional grade technology and service provision is met.
Is there any particular asset class that you think is going to be leading the way in terms of tokenized securities?
I don't think leading the way. I think there's ones that lend themselves more appropriately to tokenization than others, or tokenization and other functionality that can be provided within the blockchain technology. So it's not enough just to. I think just tokenizing something doesn't magically make it better. But tokenizing something that requires sort of provenance information to be streamed into it, such as real estate or art, that sort of makes an awful lot of sense in context. So we're looking we're spending a significant amount of energy on private markets, and there'll be announcements in that particular area very, very, very shortly, sort of amazingly shortly, that I think that's kind of paves the way for us as Six Group to be able to provide the ability for firms to raise capital at very different stages of their evolution. So historically it's been get yourself to IPO readiness, and then we can provide you with the ability to raise capital and then have price formation achieved through the exchange. We at SDX think that the technology lends itself to private markets and other ways to raise capital, such as the short-term debt issuance product from FQX, which means that at a much earlier stage in the life cycle of an organization, we as Six Group can provide that ability for them to raise capital.
It sounds very interesting, and certainly we'll be keeping an eye on that imminent product launch. I guess we have just a couple of minutes left, and it will be interesting to hear lessons learned as you've been going in this journey from 2019 all the way to today, and certainly suffering all this market volatility. Any lessons that you would like to share with people in the audience?
That digital assets and digital securities is a get-rich-slow scheme rather than cryptocurrencies, which is obviously a get-rich-quick scheme. So we've had to have a lot of so we're very grateful to the support of our member banks that have been critical in terms of getting us to where we are today. So their support has been vital. So having that sort of the clarity of mission in terms of building out the financial markets infrastructure of the future on DLT technology, and then having the support of our banks to actually do that was vital. But also working hand in glove with the other critical market participants within Switzerland, which is the regulators on the one hand and policymakers like the SNB on the other, have been also really, really vital. So instead of sort of doing the sort of a move fast and break things approach of a Facebook or see what we can get away with and pay fines later, that was never going to be the approach of Six. We were always going to have to start with, okay, how do we consider that what licenses we're going to try and acquire, and what are going to be the concerns of the regulators, and preempt those concerns as we went into those discussions, and then have a very effective and constructive dialogue with FINMA, which ultimately led to the issuance of the license to operate. So I think that was critical, and then the support of the SNB in terms of helping drive forwards the whole agenda of the wholesale CBDC project is absolutely critical too, as well as has been the BIS Innovation Hub. So it's that whole ecosystem and that cooperation that I think has led to where we are today. It certainly wasn't us just sort of going it alone and trying it out. It's been a huge effort, because that is a genuine ecosystem and one that requires genuine cooperation to actually adopt.
We're getting to the end of the time, so I would just like to thank David for your time today. Really interesting conversation, and thank you, everyone. It's been a pleasure to be here in Barcelona.
Thank you.